Before I even start, I just, I was reading a little bit ahead of everything we're going to talk about and just listening to this conversation just now. And the only thing it's in a hot wallet, right? So a cold wallet and a hot wallet is when I get paid. A cold wallet is at the end of the month. That's the only wallet I've ever seen in that hot and cold. So we need to talk about what that means later. That blew me away. So we're going to talk today about regulations in digital assets. So the world of digital assets has brought an entire set of new terms into an already acronym and definition-filled world, which has exploded in just the last few years. So terms like cryptocurrency, coins, tokens, things that we've been talking about today, CBDCs, stable coins, tokenized assets are just an example of the many terms that are now part of our daily lives, right? So these, like other mainstream financial products, are underpinned by regulation. So I come from an open banking world. I thought we were at the tip of innovation. This just blew me away. So it's fantastic. But what does this mean to businesses and the consumer? So we really need to, that's the focus of what we're going to try to do today. So to make sense of all of this, I'm joined by these experts. I would not want to waste time, and you guys have an amazing background. I think a lot of you have already been introduced. There's so many things to say. I'd just like to jump literally right into the questions here because I know we're limited in time. But there was an article published today stating that JP Morgan believes that 160 billion pounds would be saved by corporates with the implementation of CBDCs. I don't know if you've seen that today.
That was from a consultancy, wasn't it? I think they're just marketing things. You're not supposed to take them seriously. I think
you never take any of that seriously.
It's a $23 trillion market. Whether you're going to save 100 billion or 150 billion, it's inconsequential. Yeah.
So while that sounds like good news, what are the challenges of running a business and trying to understand these regulations?
Oh my God. Yeah. I mean, I started on this path probably about 2013, 2014. And, there's so many grey areas. It's about building out talented teams, getting people to try and understand it. So your legal department, your compliance department, it's end what you need to be able to support anything kind of in the crypto space. But then on top of that, you've not just got the regulators to deal with, you've also got card schemes and any other kind of scheme that you're having to navigate. And they're also not clear. So actually, I was speaking to Irina earlier about this, and we were reflecting on, I won't say which card scheme it was, but probably, and I was asking if it was still happening, because I'm not actually in that space anymore. But about 3 years ago, one of the card schemes insisted that you had to have a legal opinion on the merchant that was coming into you and the countries that they were operating in. And every single country they operated in, and it needed to be a local opinion. It couldn't be just that you would get legal advice here in the UK. You needed a local lawyer on the ground that would give you an opinion about what that business was doing in that particular country. So it is a complex environment. And as we all know, if you speak from one lawyer to another, you'll never get the same opinion. And then the card schemes then need to interpret that, and the regulators need to interpret that. So it's very opaque. I don't think it's moved on much. I still think it's pretty much still the Wild West. And I think depending on what your risk appetite as a business and your bandwidth, because you've also got to think when you look at some of these businesses, there's a massive management overlay that you need to put on top to be able to manage and monitor these types of businesses. And you've got to weigh up, is this something that you really want to do, to drive a quick revenue, possibly, because look at Revolut and some of the players, they're making substantial revenue by driving crypto through them. The overhead and the costs of it, you have to weigh up, where does that leave you on your bottom line? So, I navigated a course through that, but probably a conservative course, if I'm truly honest. I'm not really big appetite for high risk. But it is challenging. And for me, I think stronger standards and regulation would make it a lot easier for more payment businesses, I think, to navigate that space safely. I don't think you ever feel you're doing it in a way where you feel 100% comfortable. I think that's the challenge in the space at the moment. And I don't think that's changed. Unless anyone here has seen it different, I still think, and if anyone was to lift the lid on some of the companies that are doing it, and they were to be truly honest, I cannot believe there isn't areas of that that's keeping them up at night. There must be.
Absolutely.
Yeah.
What do you think, David?
Well, I think, what businesses want, generally speaking, is certainty. It's high level, but to some extent, it doesn't matter what the rules are, as long as there are some rules and everybody knows what there are. you don't want to piss away all of your startup money on lawyers. And
it's been done.
It's been done. So what businesses want is certainty, and there are different components to that, which of course come in from sort of different directions. So on the asset, I mean, the fuss over the last couple of days is about stable coins and the US Treasury comments about stable coins. So on the sort of asset side, I guess you could sort of broadly say there are sort of three kind of categories where we would need, so you have things that only have intrinsic value, like how you to regulate algorithmically controlled. I mean, the original meaning of stablecoin, actually, stablecoin's a perverted term, but and then there are things where there are actual assets involved, and how do you regulate the links to the assets and so on. And I think in the latter, which is kind of where the CBDC, the digital currency space is and things like that, actually in Europe, I think we have kind of the outlines of that. So a lot of conversation tends to focus on the US, which has a much more sort of shambolic payment infrastructure, and there is nobody in charge of payments, and there is nobody responsible for sorting the whole thing out. They don't have the concept of an electronic money institution or a payment institution or anything other than banks, basically. And I think probably the way forward is to, certainly on the digital currency side, is to create regulated institutions which do that, and then let anybody apply for the licenses. I mean, it could be the bank, it could be the telco, it could be big retailers, anybody. Let them apply for the license, which allows them to load people's wallets, basically.
Yeah.
So I think you can sort of see on that the kind of outlines of it. I think personally, where the biggest problem lies, and most compliance goes, is actually on the KYC and AML stuff.
Yeah.
And that's not particular to the crypto world, although it is interesting. AML has been extended much more deeply into the art world. So it's not particular to the crypto world, but it causes particular problems for the crypto world, because the kind of, that sort of, build things quickly and let it sort of sort itself out doesn't wash with the AML regulators. So there, I think we need a much more infrastructural, and I'm going to say this because it's all about digital identity. We don't have that infrastructure that we need. So I mean, so rather than fiddle about with what I would rather do is say, look, we need a better infrastructure around certain things. Identity is one of them. And then we can apply it into the crypto space rather than construct something specific to crypto. I prefer a more general solution.
Don't you think the issue with the crypto area is it's really where crypto hits fiat is where the challenge is? Actually, crypto to crypto actually works. It's crypto to fiat where the rubber really hits
that's
the road.
Choke point.
It is,
but I don't think that can stay the same forever, because otherwise, everybody that didn't want to pay taxes or whatever would just move everything into crypto, which they'll probably do anyway. So unless there's some way of regulating that, you'll end up with a horribly kind of, and as you pointed out at the beginning, and actually all of the studies are unequivocal about this, the market is actually tiny. I mean, the number of people that control those markets are really very small. I mean, I can't remember the numbers off the top of my head, but I mean, don't most of the Bitcoins belong to 12 people or something like that? I don't remember the exact number, but so those kind of things, like, you're absolutely right. I mean, that's where the problem is right now, but I just feel we need a better, more sort of general solution. And in a way, you could sort of argue that I mean, I'm saying this for rhetorical purposes, of course, but you can look at America and China as sort of the ends of the spectrum. And we want to be somewhere in the middle, probably. I don't think we want to be. I don't think we want the government to surveil every transaction and look at everything we're doing all of the time.
But David, on that point,
but on the other hand, we don't want this kind of pretend libertarian anarchy.
I think that's a really good point, because, again, we're bringing in some experience of other, global movements. Again, back to open banking, open data, where there's a whole discussion around, regulated versus market-driven, where the market come in and helps the regulator to establish parameters, and that's been seen as being very good, and there are people challenge it to be not so great. Where the fully regulated, allows the market then to have structures, but yet they see it as too regulated and doesn't allow for creativity or for further collaboration. How does that apply then to what we just said? Should there be a market driven approach or a market collaboration to help with regulation?
I don't know what you think. I think in retrospect, I mean, if you use open banking as the template, I mean, if we look back sort of 4 or 5, I mean, I understand why people said, and I probably agreed with it at the time, which is, let's not regulate too much. Let's just have these basic and let innovation flourish and all that sort of thing. Actually, that probably wasn't the best idea because we ended up with too many different, and then you have to have these extra layers on top to interface. And
could you do the same thing with digital assets? Could you have that market approach to help the regulator where they just don't seem to be able to regulate quick enough for?
Well, I don't necessarily think we want them to regulate too quickly. I mean, the possibility of mistakes is there, but yes, I think some. Actually, the identity point sort of illustrates this at a very fundamental level, because if you have a proper digital identity infrastructure, it wouldn't just be about the identity of people; it would be about the identity of things as well, and companies and all sorts of stuff. So then you'd have a span. So like, I know this thing, was sold by that company to that person. Now, I mean, I can think of plenty of ways. We have a cryptographically more sophisticated infrastructure now. That's not the same thing as putting everybody in a big database and giving them an ID card. We can do a bit better than that. But nonetheless, I think we need infrastructure at that kind of level. And I think the regulators would have to. It's not obvious to me that it would emerge organically unless we all end up as citizens of Facebook, basically. Maybe that's the best solution. I don't know. In the metaverse.
I think that's again a really good point, and just building off of that, and maybe for Andrea to help us understand, what does the regulation tell us, at least minimally today? What does it tell us that we can do at a very high level?
Yeah, I mean, basically, it's kind of standard AML checks that you would carry out on any merchant. I mean, I don't differentiate between, no matter whether it was a standard retail merchant or a crypto merchant coming to me. The regulation's quite clear. There is a difference around different exchanges, whether they're regulated, and there's a temporary permissions regime at the moment here in the UK. If you go onto the FCA website, they've actually got a link to the temporary permissions for companies that are trading in crypto at the moment. So you can go on and actually see that. So there's a limited number of companies there. But I would take a standard approach. And even before, actually, when I think back to the early years of us kind of moving in and looking at crypto, we used our standard kind of CDD and ED processes again against crypto. I think the challenge is it's the source. So, if I'm looking at, where are the funds coming from, really trying to understand that was always the challenge. And back then, we didn't have the tools, the understanding to really navigate that. Now, there's companies coming up. I think we all saw Visa bought a company, I'm trying to think what it's called, Cypher something, that really specialises in that space to really understand forensically the history there. So there's stuff now available that really wasn't available a couple of years ago. So I think that's the main thing. And then I think the other aspects that we're starting to see is, and I think everyone should be clear on this, that the regulator is actively engaged, and they work in the same way that probably with yourself on open banking. They're incredibly collaborative.
Who is that regulator, by the way?
Well, for me here in the UK, it's obviously the FCA.
It's the FCA.
But I think they're a proactive regulator, and they do a lot of working groups around areas. I mean, one of the areas I'm in that isn't regulated yet, a bit like buy now, pay later, is salary advance. So they sit and they have working groups and they work with various companies. And I think what they look for then is I guess a little bit of self-regulation within the industry and see how the industry starts to develop. And then I think when they start to see consumer harms, that's when they step in. But I think, we've all got to be realistic. The regulator's job is not easy and vast what they're trying to do at the moment with very limited resources. So, I think some of the things that they do, I think, are really positive, but I think they get knocked a lot, which I think is a little bit unfair given the areas they've got to cover.
The point about but that's why I think, I'm sure you think too, that's why I think these more infrastructural approaches are what's needed. I mean, it isn't for the FCA to sort out the whole problem of identity.
No. But the government is on the identity aspect, isn't it? There's some sort of bloody working group that's been going on forever. There is always a working group, I know. But I do agree with you. I think identity would solve a lot of problems in digital assets and actually broader for actually all of us.
And actually the G7 principles. So I don't read my email, but I do read the G7 principles on central bank digital currency. So the G7 principles that came out, was it last week when they started their summit thing? I can't even remember now. Was it this week?
No, last
week.
Yeah, it's been popped this
Where
week.
were they in?
Yeah.
They were in Rome or
Yes,
somewhere.
They were in Rome, yeah.
Never in Salford, things. I can't help but notice. So what, I can't remember, but one of the principles there was a potential way through all of this is, and I can't remember the exact phrasing, but it said something like, it's probably not necessary for everyone to know who everyone is, as long as somebody knows.
Yeah.
So in other words, probably the route through this is not the kind of travel rule kind of version of spraying everybody's personal information across every node on the internet. It's going to be something like, the bank or some other regulated institution knows who you are, and they give you some sort of cryptographic identifier or a financial passport, something like that, which is then used in transactions.
Yeah.
But your personal identifiable information is not part of the transactions. And then, if you get up to no good, if I am in fact using my pictures of chimpanzees with sunglasses to launder money on an enormous scale, when the police go to the bank and say, well, who is this? They'll tell them it's me. I mean, I'm not like I can get away with anything, but so I think there are the outlines of some settlements, if you like.
Yeah.
So the sort of militant crypto maximalist code is law, nobody should know anything there. That can't be right.
No,
and the government has to surveil every transaction. That can't be right either.
Yeah.
But I think we can see them outlines in the middle somewhere. And to be honest, that would take out 9/10 of the compliance costs.
Oh my God, yeah.
So just on that, I guess my last question, because I know we're running out of time, but are we leading from a regulatory perspective? Are we leading in that space in the UK? And if we're not, who is?
Oh.
Well, I agree with Andrea. I think we have a not bad regulator, really, do we?
Yeah. I mean, I'm quite pro-regulation, so I'm somewhat biased out there on that. But honestly, I think we are leading. I mean, we led the way on open banking. We might not have got it right in all areas, but we've had a good go at it, and we've set some sort of standard in the market. We've got the most companies, I think, operating in that space here in the UK, and I think in many other areas we're a thriving fintech community. And that's off the back of having a proactive regulator.
I'm very proud of the work that we've done.
Yeah, we're not too badly off, to be honest.
Yeah, I think we could be in a much worse situation with
Definitely
some other regulators.
Absolutely.
And the US, for example, it's state by state. I mean, God,
don't
if you
even
ever
talk
tried
about the US. We can't even begin.
Your money transmitter licenses per state is just horrendous.
No, I can't. Don't even want to start there, because I have that'll be a whole other segment in itself.
Can I just say one last thing when he was just talking about the identity thing? It was touched on actually on the NFT conversation. And Mike Hall losing his house on the land registry wouldn't have happened if we had proper digital identity or if it was an NFT.
It's true.
So just the last point on that is that basically what I've seen around the world around regulation is the fact that we do have a strong regulator.
Yeah.
And we're in the countries where we don't have a strong regulation, the market drives that regulation, and it's not always positive. And that's always unfortunate as well. And there's many examples of that. So just to wrap up, do we have questions from the audience on this topic? Yes.
I think about John's point. I mean, I think you're spot on with that. I think there are reasons why on the financial stability side, because we don't want society to collapse. So we should be formulating ideas about how to keep stability. On the consumer protection, it's much harder because we don't yet know what the spectrum of harms is and quite how they will resolve. I suspect, and it's no more than a hypothesis, I suspect that the legal claims surrounding the collapse of various NFTs and whatever will dwarf the PPI. I mean, right now you have people complaining all the time on Twitter that their bank won't let them send money to some NFT thing. Nothing when they start complaining to lawyers about the banks that let them send money to the NFT thing. So I think we have a big problem coming with consumer protection downstream. But I agree with you. I think it feels too soon on that because we're not quite sure how that will pan out. And in the absence of any identity infrastructure,
yeah, I agree.
It's too attractive to scammers at the moment. Although to your point, for example, what was the name of the one that went over yesterday? Squidcoin.
Yeah.
It went down and took a few million with it, didn't it? But the people that were robbed were basically other NFT people. So like, who cares really? I mean, like,
I
but when it's
that,
widows and orphans, it's a
well,
bit different.
I think that's the thing. There's a lot of speculation going on in the market, and this is where the regulator does start to get nervous, because this is where consumer harm steps in.
Yes.
Yeah.
So what I think, our regulators already talk about this, is what they're looking at is the promotion of these types of products,
that's a good point.
and regulating that, because immature investors, probably my stepson, investing in these things, not really understanding that actually the whole thing's a bit of a bloody gamble. So I actually think, our regulator is quite good at watching how the market develops, and then looking for the consumer harms, and then taking an action from there, and stopping the promotion of some of these terrible products is the right thing to do. I mean, they're all over Twitter, they're all at Instagram's a nightmare full of them all. It's shocking.
I fell victim to it myself. I invested in Foden first to score on Saturday, and it was 2-0 homes.
So, from a consumer perspective, are consumers protected?
No, they're completely not protected. And I think, unless you're a sophisticated investor, you would understand that. But for a lot of people, they steal the hype, especially, Bitcoin millionaires, billionaires. People think this is an easy way to make money. So, they want to be first in and make a couple of bucks. So I think that's the issue. I think it's the promotion of the
protection.
They're all over the tube, by the way. I came today on Canary Wharf, and I noticed them in the tube, but they actually did have the writing that you're not protected. But again, I just don't think people
really. For what? I can see.
Some sort of.
Like Miss Doge, did you miss, Dogecoin? Then
Yeah.
Oh, right.
Yeah, all over the tube.
So should I buy some?
I would recommend it.
I just know, you're good at these sort of things.
Any other questions? Yes.
Yeah, it's an interesting.
So on the financial stability side, it makes sense to have action. On the consumer protection side, it probably makes sense to wait a little while. Is that?
No. So what he was saying is basically, what is the consumer harm? The FCA has banned retail sales of crypto derivatives, but on the basis of consumer harm, which is one of the FCA's objectives.
Yeah.
So what he's saying is, the FCA's own survey of retail suggests that people who are investing in this ban actually were quite sophisticated.
Yeah.
And by the way, John Cunliffe, obviously, financial stability being one of the Bank of England's objectives. John Cunliffe himself in that speech that Cybos you mentioned, it's still financial stability, it's still not really an issue. It's only stable points that cause it. But crypto, just basic Bitcoin, isn't.
That makes sense. Any other questions? Yes.
I think I'm a little bit skeptical, because I think the roof hasn't fallen in yet. We need to go through the collapse, a bit like the tulip bulb thing that was earlier on. I mean, people talk about it and joke about it, but they don't actually study what really happened. And what really happened was when the roof fell in on tulip bulbs, again, it was relatively few people that were impacted by that, because the number of people that were paying $10 million, whatever it was, in that for tulip bulbs was pretty small, and basically tough luck if they, But after the roof fell in, that led to proper regulation of futures and options, and made a market that everybody could invest in safely, if you see what I mean. And I sort of feel, personally, we haven't quite got to that point yet. It could be just because I'm too old and too conservative. I completely accept that point. But I just feel we haven't quite got there yet. We want a more regulated market for people to act in safely. Right now, first of all, most of the trade that goes on right now is automated. It's bots trading. You don't know who's buying or selling anything. You don't know who's holding the positions. You never know who you're trading against. You can't tell when people are trading against themselves. It's not mature enough, I don't think. So I accept the criticism that maybe I'm too old, but I just don't see it. I think that's a fantastic. If you just give me 2 minutes, I'll tell you a very quick story about that, because of when I was your age, my formative younger years. I was in Australia, and I had a girlfriend, and her sister was going out with a currency trader on the Sydney Exchange. And on a Friday, he came in and said, "Listen, a mate's told me we're going to either devalue or upvalue against the US dollar when we open on Monday morning. So you're going to come with us on this. And I'm like, I'm not touching this with a barge pole. I don't understand. It all sounds completely dodgy. They're all Barrow boys. I don't want anything to do with them. And my mate said, all right, I'll put this is a long time ago, but 5,000 Australian dollars into it. And go away for the weekend. And over the weekend, he gets a phone call at the place we were staying and says, it's gone the other way, so you have to put up some more money, right? The margin call. And Rob goes, no, I've learnt my lesson. I'll let the 5,000 go. I'm not. Monday, Rick turns up in a brand new Mazda RX sports car, which is just for cash with the money that he made from the currency trade. And just told me, it's the same thing. You're trading against people who know what they're doing. You know, it's crazy to go into those trades on that kind of thing. Yeah. The people that are making all these millions out of these NFTs, you know, the tools they've got at their disposal, the bots they're running. Normal people can't possibly compete with that. They'll all lose their shirts.
I have a gentleman that lives in my building, and I won't go into any much more detail. He works about an hour a day, and he goes into oil trading, and he's part of a community, and exactly that. They go in and they make the call. They say, what do you want to do today? Let's go up. And they go up, and then they make their money. They're off in an hour, and he gets a sports car every month, like whatever it is. And they call the shots. So how do you invest against that when somebody is calling the shots of the flavor of up or down?
In the wild, I suppose, in the Wild West or whatever. I mean, this is how stock markets used to work.
Yeah.
With people buying newspapers so they could print fake stories about the other railroad or what. I mean, this used to go on all the time, and eventually we decided that's not the right way to run a market. You know, if I buy 5% of a listed company, it has to be disclosed. It has to be, or whatever it is, or 2% as I know.
Yeah.
So we sort of decided that's not the way to run markets. They should be regulated. All I'm saying is I think it might be a little too early to say what those regulations should actually be in this space. That's
so. In summarizing a little bit of that, are we saying that until there isn't a major collapse, we may not see? Unfortunately, that's what we're saying.
But it sounds weird to say, well, we have to wait until the roof
because
falls
open banking
in.
started because of the crisis, et cetera, et cetera, et cetera.
Did you want to say something more? I agree. I think actually the big players coming in will drive the regulation, which won't be such a bad thing. Because I think, you know, at the end of the day, there will be vulnerable people and there will be consumer harm and is consumer harm going on in this area. And at the end of the day, you should only ever be investing in this if you can afford to lose it. And that's the challenge. There's a lot of people that are probably investing that can't afford to lose it. Yeah. I think that's the bit where the regulator's looking out for.
If I was like a cryptocurrency billionaire, you know, which I could only dream about, but if I was, I'd be much more worried about having my door kicked through by other people who know about Bitcoin than by the government. You know, I'm surprised aren't more kidnappings and extortions already, to be honest.
There's a film called Cryptopia.
Cryptopia.
Is that on Netflix?
Yeah.
Is it?
I haven't watched it yet, but I know a friend of mine has, and we're watching parts of it. It's very interesting because it talks about the practicalities and the actual crypto industry, not the pads side of it.
Yeah.
Actually, where they're mining. Like, this is the story, but it's worth
I'll watch that. Thank you.
Well, thank you.
So, folks, on that note, I think. Oh, wow, we've got a lot of questions. Do we have time? Yeah. Are we okay? Yes. Right.
Yeah, because I would imagine, I guess it was the same on NFTs we were talking about earlier, is that if we think the more regulation comes, does it mean that actually the value becomes a little bit less? I don't know. Probably, you know what I mean? It becomes more and more mainstream.
I think NFT, though, is a slightly different case. I take your point, and you're right, it is very small, the same point that you're making. I think NFTs are, in a way, a bit more interesting to me because you could sort of I mean, I know you're going to hate this, but you can sort of divide the world of non-fungible tokens into two parts. There are tokens that are useful, and there are tokens that are useless, i.e. art in the other side of thing. And actually, the useful tokens, things like event ticketing and stuff, actually have real business cases. So the technology that's being pushed on the art side, actually, in my opinion, has some utility on the business side downstream. So I actually think that's rather interesting. And some of the problems that you're encountering, you're actually, ahead of the curve, I think, on some of this stuff, because those aren't problems on the financial side. On the cryptocurrency side, I think it's a little bit different because it's not transparently obvious, and maybe this is because I'm not as familiar with it as I should be, but it's not transparently obvious to me what the actual use cases are. Like, what problem is actually being solved by, if there was, if I could use Bitcoin down at Waitrose, well, I still wouldn't, because Bitcoins are going to be worth $1 billion. Like I read it somewhere. Why would I spend one at Waitrose? That wouldn't make any sense. But it's not solving a problem. My cards work fine down at Waitrose, and I'm still sort of groping around. On NFTs, I can see where there's application. I'm not sure if I can on the cryptocurrency
it's just
side.
It's speculation. I see cryptocurrencies.
Yeah,
please.
I'm a big fan. Yeah, I agree.
You're talking to the wrong people, because we're too conservative.
We're conservative and older.
I stay quite stable. I absolutely see. Because right now, if I go to Andrea's shop and I buy something from her, I buy something for £1. That pound has to wend its way through the highways and byways, the long gone canals and waterways, and slowly make its way through to her bank account, because it's got to go through the PSP, the acquirer, the processor, the scheme, the issuer. It's got to go through all of this. Whereas if I could just send £1 from me to Andrea, that's a very different story.
Yeah.
But are we talking about account to account, which seems to be
no, we're talking about the opposite. We're talking about not account to not account. We're talking about wallet to wallet.
This direction, I think.
I agree with that, Anasa, but I would actually come from a slightly different direction, because I would say the difference was, first of all, Bitcoin isn't money. Whatever Bitcoin is, and it's an interesting discussion about what it is, it's not money. One of the fundamental characteristics of money is fungibility, and Bitcoin is not fungible. It's property. It's not money. It's a very interesting type of digital property that didn't exist before. It exhibits some very interesting characteristics. In certain circumstances, it can exhibit money-like property, but it's not money. DM would have been money, and I agree with your analysis completely. However, I still think, look, there's now a Facebook stable coin in dollars, Paxos. If 2.3 billion people around the world start using US dollar stable coins, because remember, in many countries in the world, Facebook is the internet. There is no distinction. What would be your guess? Probably 150 out of the sort of 170, 180 currencies would just vanish. No sane person would hold any of those currencies. They hold dollar instead. So the implications go far beyond speculation and.
Absolutely.
But that point about Amazon is really interesting to me. So we live in a world. I can't resist this. I hope you don't mind. I can't resist this joke. So Amazon, Amazon is now opening actual shops, like real world shops in various places. That sort of blurring of real and virtual is getting very, very strange. Not just shops. There are other examples sort of beyond Amazon. So the idea that you have the metaverse and that can't be quite right. It's going to be much more jumbled up than that. And what's very fascinating to me, because I'm much more interested in NFT stuff, is if you remember the virtual worlds from many years ago, when those virtual world economies first began to develop, they were an object of really interesting study. World of Warcraft, Entropy Universe, and things like that. But they never really quite made that extra step, because they didn't have the NFT, the sort of copyability. You couldn't emulate the real world in those virtual worlds because you didn't have NFTs. But now you can. So actually, my guess is that sort of stuff's going to accelerate, but its anchor in the physical world will remain. And so what that's implying to me is that people will come up with some incredible new business models and incredible new businesses in the metaverse, but we won't disappear into the metaverse, if you see what I mean. Because Amazon ended up opening shops.
Exactly.
God knows where
behind you, about a
Pornhub
block away.
will end up.
Anyway, thank you very, very much, Andrea and David, for your time. Really, I think we could be here for 2 hours.